Time now for the Opening Market Podcast on the Iowa Agribusiness Radio Network. I'm Dustin Huffman. We're talking with Greg McBride of Allendale. And Greg, we had a little bit of a surge in the beans overnight. Looks to be keeping going here at the Open. What are we looking at today?
I think we're just seeing some recovery from that washout that we had on Sunday night and into Monday. You're about at the highs today. You're about 30 cents off the lows that were posted on Tuesday morning or Tuesday in the overnight. The big thing right now is everybody's got their eyes set on that celebration of agriculture that's going to happen in Washington next Friday. That is when they are expected, or they've said that they're going to make the announcements on the biofuel blend mandates and all that kind of stuff. So I would think that has to be the excitement surrounding the market, because it certainly isn't in the crude oil and the energies today. That's very quiet. You get the heating oil down, so there's no spillover support for the bean oil. The bean oil doing its own thing right now. So I think that's part of it. I think the other side of things, and why we aren't really doing more with it, is you do have the wheat backing off, even though there's only about a quarter of an inch of rain in wheat country over the next 15 days. It's backing off because it follows more to the crude oil side of things here recently, and that's putting some influence into the corn, down a couple of cents as we got up near the most recent highs yesterday.
You know, it's interesting. I know we've been talking a little about this week, about the possible RVO announcement here, at least this last part of the week. I mean, how much cautious optimism is there still going to be from that biofuels industry? Because we've come to this spot many times thinking we were going to get what we needed, and sometimes it's come up very short.
Well, I've said this kind of half jokingly to a lot of customers. I feel like you have to have, if you're going to do a celebration of agriculture and you're going to do this RVO announcement all at the same time and in the same space, you'd better come in with something that's beneficial, because you may find yourself at the wrong end of a pitchfork on this thing. So I think you've got to think that this is this enthusiasm that you're seeing. It does mean that they're going to get a beneficial or favorable ruling on what the RVOs are going to be, and at that point, there will be some spillover into the ethanol space. But this is what the market needs, considering that we've now kicked back the Trump G meeting at least 5 or 6 weeks. We've also gotten to the point where now we're more focused on acres and trying to figure out just how many acres we're going to increase on the bean side of things here.
Yeah, that was my next question. I mean, obviously the fertilizer situation's got farmers maybe thinking their acres, but then again, how many farmers have already got their fertilizer or already had it purchased, sort of the part where they probably won't be affected too much either?
Yeah, that's been my take on this, and I it's hard to say how much was actually locked in for most of these producers. They had there was a lot of fall application. There was a lot that was locked in late summer, early fall last year. And so you don't know. I don't think that this is necessarily as big of a deal for this crop year. I feel like this is more of a 27-28 crop year situation, depending on how long this goes. So yes, it will have some impact as far as how much anybody applies, as far as side dressing and that kind of stuff. But I don't think it's necessarily. I don't think we're talking about, people abandoning fertilizer, because a lot of that, like I said, was already either applied or has already been locked in. So there's not as much caution on that at this point in the year. This becomes more of a conversation for next year. But the idea is still the same. We still know that we have, at least with what we know, we have guaranteed demand out of China for 25 million metric tons for new crop corn for this year, next year, and the year after. So that bought some acres on the bean side of things, takes away a little bit from corn. But even if you take 5 million acres away from corn, and you're talking about 93.5 or 94 million acres of corn, that's still one of the largest plantings we've ever had in this country. So we're still very, very high on our corn acres, and it will put a dent in the ending stocks, but it won't necessarily make things super tight when it comes to ending stocks and stocks to use ratio.
All right, Greg, moving over to the livestock side of things, of course, starting with cattle, the cattle on feed report coming out later on this afternoon. What kind of expectations are you thinking? We also haven't had much cash trade develop yet this week.
Yeah, we haven't seen. We saw some bids, but nothing solid for cash, and that's somewhat normal on a cattle on feed week. They probably a lot of times are going to wait until they see what that report does before they lock in that cash, or it'll be very tepid and minor. But a lot of what we're seeing when it comes to the cattle market is more watching what's happening with obviously the cash side of things, but also what's happening in the stock market. You see the stock market, and that it's been backing off for the last few weeks with the war and all that stuff and concerns about that. That's put a little bit of a negative spin into things, because that's as wealth moves, you start to see people maybe back off on maybe the premium cuts of beef and whatnot. So there's concerns there. You see that box beef had gotten very strong up until about Tuesday, and now it's backed off for the last couple of days. Now that puts a little bit of a hitch in the giddy up and says, well, maybe we need to pump the brakes on this little recovery we've seen. And that's what we got to watch. Now, when it comes to this cattle on feed report this afternoon, this is one of those reports where we're not actually looking at any major adjustments to the on feed number or the placements at this point. They're both very much in line with where we were at last year. It's going to be the marketings that we really need to be watching. Those are significantly lower for this report. At least the estimates are. So that'll be something to watch at this point. But most of these cattle on feed reports, because of the situation with the screwworm and the importing of cattle from Mexico, it's become a situation where it's almost always bullish. But is it bullish enough to maybe make that next move up?
All right, and before we wrap up, how does hogs look shaping into the end of this week?
Yeah, so we're up just a little bit to start the week here. I do feel like when you look at those deferred contracts, or those late spring and summer contracts, the June, July, August, I do feel like we need to see those find a little bit of a recovery here. We've backed off in the last few days or the last couple of weeks here, and I think you're at a measure of support right now. Cash hasn't been all that great, so if we can get that market to pop back up, I think we can go back up to that 110 area on those June, July, August contracts. But I'd be cautious to really jump into anything from the long side just yet, as we do see this market really take some steep cuts when it does fall off.
All right, Greg McBride's been our guest here on the Opening Markets. Greg, if folks want to reach out to your group at Allendale and talk some of the market situations, what's the best way for them to contact?
Give us a call at 800-2-MARKET. That's 800-262-7538.
All right, Greg, thanks so much. We appreciate your insight as always.
Thank you, Dustin.
That again was Greg McBride of Allendale. Let's run down the market numbers. May corn 3.5 lower at 466 1/4. December new crop corn right now is trading down 2.5 at 492 even. May soybeans up 1 1/4 at 1169 3/4. November new crop up 1.5 at 1147 3/4. Soybean meal is trading down 90 cents at 331.60. Soy oil 67 cents higher at 66.08. Chicago wheat down 3 3/4 at 604 1/4. Kansas winter wheat down 8 3/4 at 618 1/2. Kansas spring wheat down 4 cents at 630 even. Minneapolis spring wheat down 4 1/4 at 639 1/2. Oats up 4 1/4 at 372 even. On the Merc live cattle down 22 cents at 233 even, and feeder cattle up $1.10 at 348.85. Lean hogs down 7 cents at 91.97. Pork cutouts unchanged at 103.40, and Class 3 milk 2 cents higher at 17.15. Thanks again to Greg McBride of Allendale for joining us here today. This has been the Opening Market Podcast on the Iowa Agribusiness Radio Network, where Iowa Ag matters.